Welcome to Brookfield Perspectives, a podcast that explores the Brookfield ecosystem's role in creating sustainable wealth on a global scale. Today, we have another edition of Deal Debrief, where we get the download on recent transactions from the people who put them together. On this episode, we're traveling to Korea to explore the recent sale of Cheongna Logistics, or CLC, with Andrew Burych and Michael Cocozzo from Brookfield's real estate business. Together, we'll dive into what makes this a monumental transaction within the region and beyond. Well, Andrew, Michael, welcome to the podcast. Let's just start with you guys introducing yourselves and telling us a little bit about what you do at Brookfield. Andrew, do you want to start?
Sure. Hi, everyone. My name's Andrew Burych, and I'm a partner in our Asia real estate business. And I've been with Brookfield for over 16 years, having spent some time in Europe and North America before moving to Asia in 2023.
Hi, everyone. My name's Michael Cocozzo. I'm a senior vice president in the Asia real estate group. I'm responsible for overseeing our industrial business across APAC and the Middle East. Been with Brookfield for just over 10 years, having spent around 7 of those in New York.
Great. Well, we have nearly 3 decades between you two at Brookfield, so I know we have a lot of experience to draw on for this episode. So we're here to talk about actually the first transaction that we're featuring out of Korea. And I thought it would be helpful for our listeners just for you to give us some context about the market, help us understand the general opportunities there.
Yeah, absolutely. We actually opened up a Korean office over a decade ago, initially to do some fundraising, but we quickly bought our first asset in Seoul in 2016. And we've had a great experience so far. And it's really a key market for us to continue growing our real estate business. We see really strong opportunity across logistics, office, data centers, and some of the emerging sectors as well. And aside from just the real estate, we are very big partners with a lot of Korean organizations, and we look to deliver long-term value for them both in Korea, but also across the globe. So it's a strong relationship on both fronts.
That's great. And I'm just curious in terms of context, because you gave us a good overview, is there anything specifically we would dive into in real estate or in industrial in particular that we feel is unique potentially to Korea in the region?
Korea's a established economy in APAC. It's one of the developed markets. We see good GDP growth in the country. There's a lot of factors that make it an attractive place to invest. The fundamentals for some of the sectors that we like, including logistics, including office, make sense for us. We've got familiarity. We've got a team on the ground, both on the operating side, but also on the investment side. And so we're able to actually execute on business plans ourselves, but not really rely on local operating partners.
Let's turn now to CLC specifically. This was, as you said, a significant transaction, not just for Brookfield, but really for the region at large. And I'm hoping you can tell us a little bit about more why that is.
When we are looking at entering into the logistics market in Korea, or really any new market, we want to do so at scale. So CLC was a really attractive opportunity because just the sheer size of the asset itself, it really is, well, we'd like to refer to it as one of the built wonders of the world. It can be difficult to really comprehend how large the warehouse is itself, but to put that into context, it's a length of about 5 football pitches. And so you really almost need a golf buggy to be able to drive around and tour the site. And that was very attractive to us, not only to deploy a lot of capital in an efficient manner, but to utilize our on-the-ground team and execute our business plan in leasing the asset.
Seems like it's a one of one in terms of its size, in terms of its scale. Is it also hard to replicate in terms of its location or the operations within it? Can you paint us a picture for what goes on inside of it?
Sure. So the site itself is located in Incheon, which is a market located in between the CBD and the airport. So it's a really prime location for multiple uses, last mile delivery, freight forwarding related with access to the airport. But what was unique about and interesting about this deal was that we were able to secure an anchor tenant with Coupon, which is the Amazon equivalent in Korea. And so the majority of the space is utilized for e-commerce.
Something we're increasingly familiar with, I would say, around the world. Andrew, is there any other bits you'd add to this?
Yeah, I think Michael hit on a lot of the big points, but one of the other things that we liked was the spec of the asset. It was forward thinking for the time. So 10-meter floor heights, a lot of power, access to the site. It was really ready for the next generation e-commerce tenant. And we thought that was very important for how the market was evolving at the time.
Yeah. And so, given sometimes we have transactions like this where a site or an asset is so unique, how does an opportunity like this come about? How does even the opportunity to be part of this business arise?
We've got a local team that we ended up hiring as part of our logistics program for one of our opportunity funds. And the idea was we found these two experienced real estate or logistics developers that we're going to build a team around. And it really was through their local relationship with a developer. In this case, we ended up avoiding a marketed transaction, which is how we want to do a lot of our deals in an off-market fashion. So finding the two guys that we wanted to work with and then having them source the deal.
So, when an opportunity like that arises, especially through a more direct relationship, what are some of the goals, or how do we think about that sort of acquisition and then operational plan thereafter? What does it look like with CLC?
Yeah, working with the two individuals that Andrew mentioned, first and foremost, what's critical is having alignment on what the business plan is, and then working towards achieving those mainly leasing objectives. Now, as I mentioned earlier, we were fortunate that as part of the deal, we were able to secure Coupon as an anchor tenant for approximately 40% of the space. So having that foothold of a tenant is extremely important. The business plan went through several ebbs and flows. It never pans out exactly as you expect at the beginning of the underwrite. But what was really successful as it relates to CLC was using our operating team who maintained that really close relationship with the tenant, speaking with them on a weekly or bi-weekly basis to understand how their business needs are evolving, what type of new business lines they're going to implement, how their demand for space is evolving. And so we did a couple of things in order to basically secure the majority of the occupancy through that single tenant. So we brought in new power, move fast so that they could invest in their automated systems. We originally had space targeted that would be utilized for cold storage. The tenant actually required additional dry warehousing, so we converted it from cold to dry. So we're able to do that by having a lot of touch points with the tenant, and that effectively got us to achieving 100% occupancy up until the point of sale.
I would just add to what Michael was saying. I think in the time that we owned the asset, there was a lot of supply that was delivered that was a real concern to the business plan itself. And we didn't really see all of it coming at the time. So it's really a testament to what the team did on the ground to lease up the asset, but to the quality of the asset itself to get to 100% occupancy. In the market today, you're just not seeing that happen on a site of this scale. So we're really, really happy with the outcome of the business plan.
Yeah, I'm trying to imagine filling millions and millions of square feet. It's a lot to capture. I'm curious because obviously we have logistics footprints and operating expertise around the world. Was there any experience or lessons learned from our team in other regions that helped inform you on this path with CLC?
I would say the real value add driver that came from utilizing our global expertise was in basically help certify the quality of the spec. Because I think the logistics market in Korea, as compared to North America and Europe, is in its relative infant stages. So as Andrew mentioned, this was kind of a forward-looking build. We were able to bring over some of our colleagues from the US. They were able to review the design plans from the developer, collaborate with the local team so that we really got comfort that a development of this size was really going to be up to modern specifications. And that in turn gave us confidence in able to lease the asset.
Yeah. And I would actually add to that. One of the benefits that we had for the team that we were building on the ground in Korea was they had access to the team in North America or the team in Europe to talk to on best practices. So doing things like what we call in logistics make-ready space, which is showing space to a tenant that is effectively ready to utilize. It helps them imagine how they would operate in the space. You don't see that as much in APAC. So taking those learnings that we have from some of the other markets and teaching those best practices to the team is also very beneficial.
So speaking of forward looking, we eventually got to the point with CLC where it was primed to exit. And I'm curious what that thought process looked like and how we actually got to that decision after a lot of this partnership and a lot of this in the trenches work with the site over time.
Yeah, I would say about a year before we thought about exiting, we had already started to look at ways to repatriate some capital to our investors. And when we got above 85% occupancy, we decided to refinance the asset. And so that was a good litmus test for us to understand the depth of liquidity in the financing markets. And so then as we got closer to completion of the business plan, we started to think about what we could do to sell the asset. And to be honest, we were a little bit concerned about the size of the asset. There had never been a deal of this size done in this market. And I think in APAC in general, for a single asset in logistics to be $700 to $800 million was very unique. So we had some concerns about the depth of liquidity for the asset, but we started to see signals from the local Korean institutions that they were starting to look favorably on the logistics sector. And off the back of our existing financing and knowing that the financing markets were going to be generally supportive to this type of transaction and the credit of the tenant, we felt good about going to market and looking to sell the asset. So we made the decision to do so. And there was more demand that I would say than I thought there was going to be, which was a great vote of confidence for the asset and set us up for a competitive enough process to get an excellent price for us.
Yeah, right place, right time, right environment, kind of all comes together. So when we have this transaction sort of completed, we're on the other side of it. We've obviously added another experience under our belt in Korea and in the region in this space. What's next? What are we starting to look at? How are we starting to think about the other opportunities that there might be out there in the near term?
In the Korean market, we touched a little bit on the extra supply that came on over the last few years in the logistics space. And what has happened as a result is that there's been some liquidity issues in some of the other assets that haven't been able to lease up, that don't have the sort of same experience or expertise that we have. I would also say that a lot of the Korean developers, they used a lot more leverage than we would typically see in other markets. So that's led to a bunch of stress in the market on the financing side. So what we've actually been doing, we've been spending a lot of time is looking at ways to either buy loans with the view to getting control of the equity or providing rescue loans to various developers. And that's been a great area for building out our pipeline. We like other sectors in the Korean market. We're looking at a few office deals. We think the fundamentals for hotels are incredibly good right now. There's not a lot of international brands. There's not enough hotel space for the amount of tourism that Korea is seeing. So it's a good backdrop for rent growth there. And then we've been really trying to crack the living sector in Korea. And even just outside of Korea, we're really looking to build on the living sector across all of APAC as well. So I would say that's where we're focusing our time in Korea, but more broadly in Asia, it's a lot of the same themes we're seeing as we're seeing in Korea.
Well, and buoyed by a lot of that strong GDP growth in the region relative maybe to others, there's a lot of opportunity there. Is there anything that surprised you about CLC and working on this transaction and ultimately this full business plan and exit process, or something you didn't expect or you learned that was notable to you compared to other things that you're working on or other trends that you keep track of?
It's not really a surprise, but it always surprises me every time when there's assets of this size is that ultimately the good real estate finds a home in a new buyer every time we bring something out to market. If it's got great tenants, if it's got great credit, you'll find someone who wants to own it for the long term, which is our business ultimately.
Quality over quantity.
High quality real estate always wins.
Yeah. Michael, what about you?
It's not a surprise, I would say, but I think the takeaway I have is that creating that strong relationship with the tenant will always get you a better leasing outcome than just playing on, call it macroeconomic factors. Especially in Asia, discussions with tenants are really bilateral, and you're able to get higher rents, longer lease tenants, and in better terms overall. When that tenant trusts you, you'll be the first person that they call as soon as they have a new requirement, and that really is why CLC was successful.
Yeah, definitely a long game, I would say. Takes sometimes much longer than you imagine. And then at the end, there's a big benefit to everybody, which is great.
For sure. It's definitely where we're focusing a lot going forward is deepening our relationship with global and local tenants across the region. You never know when someone will have a new demand for a build-to-suit facility or has a new key client that now needs to take up 1 million square feet, and you want to be that first person that they call and they pick up the phone.
With that, we'll see. We'll have to wait till the next time someone picks up the phone and you can come back and tell us about the next one. Thank you, guys. It was great to have you today. Thanks for coming.
Yeah, thank you for having us.
Yes, thank you.
Thanks for listening to another episode of Brookfield Perspectives. Make sure to follow us wherever you listen. You'll be the first to hear when new episodes drop.
This podcast is for educational and informational purposes only and does not constitute an offer to sell or a solicitation of an offer to buy any securities or related financial instruments offered or sponsored by Brookfield. The information and views discussed are subject to change without notice. Any investment involves significant risks, including loss of the entire investment.
Audiation.